Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A third countering bullish engulfing pattern and bullish closing white Mariposa yesterday after the previous session's counter to the counter bearish harami and hanging man pattern. The markets finished its pullback from peaking at the 2019 high at 115.70, and I suppose also from the bright red neckline extension of the August to September 2020 head and shoulders top, currently 114.67, plus the congestion area between 114.82 to 114.95, made up from the January 22 high at 114.82 and a February 22 high at 114.95. This had been a new high and high close back then, not seen since November 2021. Overhead beyond the 2019 high, we have the November 2020 low at 116.02, then the 2023 based upper bull channel line currently at 116.46, and the lower bull channel line currently 117.10, and in between the October 2019 high at 116.92. I still think it might be reasonable to view this April action as a potential bullish halfway hesitation with a possible topside target X now in the 117.25 area. Now looking below, we have the July 23 high at 112.76 and then the 2024 high in September of last year at 112.13. Finally, as I have said previously and repeatedly, we are now set up with just 4 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we're beyond. Anything in between, and we will have a lesser outside year pattern. I am at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one. Now, so far today, an open at the June 2020 high at 114.22, but a pullback lower, though not that far right now. Cable, aka sterling against the US dollar. A very impressive bullish engulfing pattern and bullish long white Mariposa yesterday. That is a very crucial move higher and one which I will shortly explain. This after yesterday's counter to the counter bearish harami and hanging man pattern. Prices open just below the purple neckline, currently at 133.09 of the small but influential mid-November to early December 24 reverse head and shoulders continuation pattern, as well as the March 22 high at 132.98, and just above the August 2024 high at 132.65, and then swiftly headed higher through the purple neckline and March 22 high and into a fairly clear area until the bright red newly reassigned 2021 to date downtrend, currently at 134.18, which it passed through but soon after halted, stopping just over the hugely significant September 24 high at 134.34. Okay, so I have repeatedly asked you to keep an eye on this September 2024 high at 134.34. The reason being that if prices exceed that level, and they have now done so, that if they exceed that level, then we would have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. This pattern has already happened in euro-dollar, and yesterday, sterling against the US dollar, cable, has also set up the conditions for such a pattern. Thus, if we close on Wednesday, the 31st of December, 2025, either over 134.34 or under 122.96, then we're beyond. Anything in between them would have a lesser outside year pattern. I am at this stage not even going to contemplate what the result of the end of the year would be, just that we are set up to achieve one. In the meantime, it is worth noting that overhead we have the September 2020 high at 134.83 and the 2019 high at 135.16, which are part of a congestion area between 134.83 to 136.43, containing congestion at 135.81, 136.21, and the February 22 high at 136.43. Now, so far today, a reactionary move lower so far, though only down to just below the bright red breached downtrend. US dollar against the Japanese yen. A counter-reactionary bearish closing black Mariposa yesterday after the previous session's bullish white soldier. Prices pulled back, oddly enough, from the declining short moving average, which is currently at 143.66. Down towards, but not reaching the August 24 low at 141.66, and leaving the overhead 50% Fibonacci line of the January 23 to July 24 move at 144.58. Now further up we have little until the lesser Fibonacci line at 146.69, which ties in with the March low at 146.52. Looking below, we have the dark blue neckline extension of the August to October 2024 reverse head and shoulders bottom, currently at 140.72, and the broken pink upper trend line, currently at 139.88, of the well highlighted early February to late March descending wedge pattern, plus the significant 38.2% Fibonacci line of the January 23 to July 24 move at 140.48. Now this 38.2% Fibonacci line held up the market back in September of last year on a closing basis and did the same last week. We also have just below this the pink lower trend line, currently at 139.12, just below the September last year low at 139.55. This pink lower trend line is important, as I will shortly explain. Overall, the market remains within the larger, big picture bearish item, and that is the bright red July 24 to January 25 bearish Andrews pitchfork, with the bright red upper time above, currently at 148.53, and the middle time below, currently at 133.24. Now this pitchfork has shown and continues to show the bearish angle of attack of this market. However, there is also another pattern, or potential pattern, I'd like to discuss. And that is to regard the whole February to date action, even the whole mid-January to date action, as a possible descending expanding wedge pattern, with the bright red upper time making up the upper trend line and the pink lower trend line making the lower trend line. So far today, we've had a move up from the open, but not by much. US dollar against the CNH, the offshore Chinese yuan. A bearish engulfing pattern yesterday, if only just, but one that wasn't that hard to do, as the previous session was an indecisive doji cross. The market was once again capped on a closing basis by the flatlining mauve medium moving average, currently 728.99, and supported below by the green flatlining short medium moving average, currently 727.52. Interestingly, prices closed right on the pink lower time below, currently at 728.55, the bullish shift pitchfork for the late September 24 to mid-March 25 move, a level it has been butting down against for most of last week. Looking further up, we have the July 24 high at 731.13, and some distance higher we have the congestion area between 734.41 to 734.96, containing the October 23 high at 734.75 and the August 23 high at 734.96. Whilst below we have a small recent early March to date uptrend, currently at 726.30, and then a lesser Fibonacci line at 725.47 before we see the low of April so far at 723.86. Now, there is one new pattern that has recently presented itself, and is a small one but still significant, is an April-based descending triangle, currently 727.48 to 730.33. As I said, it is small, but it's still there and worth watching. Now, so far today, a significant breakdown below the pink lower time, the green moving average, and the small lower trend line of the descending triangle, pushing below the newly drawn early March to date uptrend, and down to that lesser Fibonacci line at 725.47 before pulling back up from there. Now, we haven't as yet closed below the small descending triangle, and there is a strong possibility still of a false break lower, but I feel obliged to lay out some downside potentials for the descending triangle pattern. Thus, a primary potential would be down in the 724.58 zone, with a secondary, harder to reach potential down in the 721.69 zone. US dollar against the Brazilian real. A bearish engulfing pattern yesterday, which wasn't that hard to do as the previous session was an indecisive doji cross. It was nevertheless a significant move lower, as after butting up against the dark blue lower time below, which is currently at 566.76 of the mid-August 24 to early April 25 bullish Andrews pitchfork for most of last week, yesterday prices broke down through and closed below, halting at the significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07, and just above the purple May 24 today uptrend, currently at 563.25, and the low of very early April at 559.22. Overall, well, overhead actually, we still have the combination of the slowly declining green short medium moving average, currently at 576.68, and the gold flatlining long moving average, currently 577.15, that are both just over the December 2021 high at 575.78. There is another key outstanding feature here that's still in development. We are set up now for a possible monthly key reversal here. Thus, if we close on Wednesday the 30th of April, either over 588.52 or under 584.10, then we'll be on. Anything in between would have a lesser outside month pattern. Right now we're looking at a monthly key reversal down. Now my final thought centers around my possibly reactivating the bullish shift pitchfork for the same move as the dark blue bullish Andrews pitchfork, because the lower untested time is currently down at 561.62. US dollar against the Mexican peso. A counter to the counter bullish engulfing pattern yesterday after the previous session's interesting combined immediate countering key reversal down, plus day 2 and a 2-day bearish separating lines pattern, as well as a bearish closing black Mariposa. It was a somewhat surprising move back up after making a new recent low, and quite reactionary in its implications or implementation. Prices closed back up over the 2021 low at 1953.63, but came nowhere near the next congestion area overhead of the April 22 low at 1971.68, and then the significant congestion zone between 1987.96 and 1991.31, capped a little higher by the slowly rising gold long moving average, currently at 1999.07. Meanwhile, below we have the supports at 1940.68 down to 1936.27, and between 1915.03 to 1920.38. The latter is made up from the 50% Fibonacci in the November 20 to April 24 move and the March 2020 low respectively. Looking further overhead, we have a very wide congestion band that eventually becomes a rectangle top pattern and is centered on the September 22 high at 2057.65, stretching roughly between 2017.20 up to around the 2083 area. The recent actions here have also set up conditions for April to possibly become a monthly key reversal. Thus, if we close on Wednesday the 30th of April either over 2053.10 or under 2045.80, then would be on. Anything in between would have a lesser outside month pattern. Right now we are very much looking at a monthly key reversal down. Now so far today, a further small attempt higher, just over yesterday's high, but still short of the 2021 low that's overhead.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.